So in this lesson, we are going to be focusing on wedges and the dynamic nature of them. And we can use these wedges to help us identify the boiling point right before a breakout moment. Now, there must be at least 50 static variations which you will see flying around the TA space. But as we've stated before, using these static and arbitrary patterns is really non-beneficial. And actually, we can use wedges to actually develop our understanding of the dynamic nature of our charts. So you may ask, well, what is it that wedges show us? And you may have guessed it. Trend. We would have had support against resistance. We have an uptrend against a downtrend. And therefore you may ask, well, what is then the usefulness of using a wedge? Why can't we just mark trend? And this is the difference. Our wedges can be used dynamically, whereas our trends stay static on our charts. So if we just label these as static, like so, we can expect to see three scenarios occur. Obviously, you end up doing something like this, and then you create your uptrend and your downtrend, support and resistance, and you're going to get to this point where you reach the apex, where there are really three scenarios which can occur. You're either going to break out to the upside, you're going to get that ignition and the momentum comes in and you move up because you've broken your resistance, or you're going to move downwards, and I suppose we should change the colour, or you're going to move downwards, or the third scenario is you just move sideways. And this is where the dynamic nature of your wedge comes into play. Because if you move sideways, and again, the market never moves sideways, but on a lower time frame, you may see something like this. Okay, so you move sideways, up and down on a smaller time frame. All you do with your wedge now is pull it to the new swing low and the new swing high. New swing low, new swing high. So if you're not seeing those bigger breakout moments, it is likely you have what? You have gone into a form of accumulation. Now, if you think back to accumulation distribution phases, like so, let's just change the colour of this to random colour yellow. You originally have what? You have the move down, followed by accumulation. What happens after you break out of accumulation? You move up. The larger the accumulation, and therefore the larger you extend, the more times you're extending your wedge out, like so, the likelihood is when you break that wedge, you're going to move up in a bigger way. Because the longer you're in accumulation, the more likelihood is that once you break out in a violent way and you move up large percentages. So that is the dynamic nature of the way in which you can use your wedge, and you're adapting it to the constant and very next swing. So if we clean up our chart, we can look at an example on stall now. So let's look at an example of a wedge here. Now, in fact, you know what, let's go to, we can mark this wedge here. We can go from the swing low to the original swing high, and you pull out and you create a wedge. And actually, we're going to go into a lower time frame here. And we will actually cut the move at this point here. So you can see here that it looks like we've created a nice wedge. Let's move in and get this nice and accurate. You have the swing low here. You have the hard left edge to what looks like it's going to be resistance. Let's play this on a little bit. Yep, you get the movement down. And then you have the swing low. So let's actually just use trends. So we've got swing low to swing low. You have the new swing high to swing high. And you've created your wedge that you live inside of. So the occurrences are, you break up to the upside and continue your uptrend. You copy and paste that. You move down, resistance, or you do something where, you just kind of move sideways and there's no real movement. So we will see what occurs here. So you're moving down towards support. If you break this support, what is going to likely occur? You move down in a bigger way. Look, we're moving down. So there you go. Perfect example. You're coming back up. You hit trend. Once this was level of support, right? Okay. And this is where the static nature comes in. So this becomes static because obviously it's our trend. So we have a static trend. And when we speak about a static trend, it lives on our chart forever until the point it goes through what is known as invalidation. And this is a very deep concept which we'll progress to in the future. Because obviously if you had a million trends and you never deleted a trend off your chart, you know, your chart would never be clear and concise, and it would be very, very hard to determine what trend you've actually hit. So static trend, and obviously I won't write it, but you have a static trend on the top as well, like so. In fact, you know what? Let's just write it. Static trend, just for visual purposes. Static trend. And you've broken this trend now. And what are you doing? You've broken support. You're coming back up. You're testing it. And this is where you might bounce off because it acts as resistance. There you go, look. What does support turn into? Resistance. And look at this resistance we're constantly seeing here at our static trend. And that's because it lives on our chart forever. And this is where the dynamic nature of the wedge comes in. Your wedge you can now pull out to the new swing low. So your wedge is now here. So now your wedge is here. So this is the dynamic nature of the wedge against the static use of trends. So, you know, obviously we did this. We moved down. So we'll just get rid of that. We can still move up here. Or we could, you know, begin to kind of move sideways. Or again, we could do what? Move down again. Let's play this out. Look, we're using now this wedge as support. Perfect. We've come up and we've hit this static resistance. We hit it with pullback resistance. Now we're breaking out. We get a nice little move here. And what do we hit? Our trend once more, which turns into resistance. Now we're using our past resistance as support on this side of the move. As you can see, look, support, support, support. So you're now beginning to see the nature of the way in which these trends and our wedges are respected to the T. So we can play this out. Obviously your wedge pattern would have come to this dynamic nature here, which we originally had. What occurs when you lose your wedge? So your new static uptrend would be here. What occurs? You lose the uptrend, you come back up, you hit resistance, pull back. And what happens when you movement down? You're going to look for a level. So you have a swing low here, which may look to support the move. You come down, look, you hit the level, you move up. And again, on this side of the move, you'll be creating a new dynamic wedge on the opposite side now. So if we remove everything, we keep our swing low as support. We add our new wedge, which we are creating. We now have. And obviously, this wedge and the creation of these wedges does what? It creates our bigger peaks and valleys, like so. And we can use these wedges to see what we are likely to create. Are we still in a peak? Are we still creating that peak? Are we moving into creating a larger wedge or a larger valley, sorry? So you have this now. And obviously, technically, you know, this wedge would be like this. Quite difficult sometimes with trading view. So basically, you want the hard left edge. Again, so what would be the new hard right edge, which would initially be... Turn the magnet tool off. In fact, let's just do it with trend. It's easy to do it with trend. Accumulation to... So we have... So you swing high to swing high. Turn the magnet tool on. Swing high. High. We would be like this. Look, you break out of your wedge, you move up. Is your breaking trend? But the trend remains static on your chart where you can adapt out your wedge, which is sometimes difficult with the magnet tool on, so it's probably best just to turn the magnet tool off. You'll plot your wedge like so. Lay this out. We get a move up. So look, now we have the bottom of our wedge, so our support like this against our resistance. Wherever we create our next swing high, there you go. There's your resistance. So you see, once you lose the bottom of your wedge, you know, what would you be? You know, you call it your uptrend. You come down, move it back, move back up, hit it, resistance. Once you break out of this, you've got this larger wedge now. You're going to move up. See, you move up. You use the static trend, where you could pull your wedge out now to even this point here. And you can keep bringing it out. Look, break the wedge, move up. Now if you break this wedge to the bottom side and you break that level of support, what's going to happen, guys? You're going to move down. Where you're probably going to go to the next level of support, which is your swing low. And there's different levels, guys, we're going to be learning about in the future. Deeper knowledge, there you go. come down, hit the level, move up. You get a move up, and you actually fail down even further. So that is wedges and the dynamic nature of wedges.